Hello and welcome back to another episode of the For the Property Investor podcast. And we're here with the weekly news, which means that Nick Bendel is here as well. Welcome, Nick.
Welcome, Owen. Do we ever take a break? We are just here week after week. We are relentless.
We are relentless and we'll never give up. We might move on, but we'll never give up.
No. If we do move on, it will be undefeated. We will be unsubmissive.
Yes.
Okay.
Very true.
That's reassuring. How was your week?
My week was pretty good. I'm glad to say we've had some good results here at Leafield. Of course, we're a national property management business covering 5 states, and we've got some new staff on board to help us with getting catch up on a bit of backlog from being overworked and understaffed for the first half of this year. So it's a welcome relief to have good staff and enough staff. And it makes a whole lot of difference in a property management business. But because nothing stops, need to be leased, and toilets need to be fixed, as well as leaky taps and everything else that goes along with property management. So yeah. How about you, Nick? What's been happening in your week for last week?
Well, I've had a good week. Partly on the personal front, I've communicated with a couple of my property managers, and can I just say how much I value the support of a good property manager? They protect and enhance the value of your asset, and they really do relieve you of a lot of stress. I really, really value what a good property manager can do. So that was kind of on the personal front. On the business front, my business, Hunter and Scribe, we're a copywriting agency that writes content for property and financial services businesses, and we received a wonderful 5-star Google review from a financial advisor. Nick was great to work with. I needed an urgent communication piece drafted to send to my clients, and he well and truly met my expectations. And we have more than 200 5-star Google reviews, which we're very grateful for.
Wow, well done. I think it's time for the news, Nick. I've had a sneak peek at the 3 stories you've brought us, and they look like good ones. What's in the news this week?
We're going to start in Victoria with Victoria moves to stamp out underquoting. Victoria has overhauled its auction transparency laws, requiring agents to publish a reserve price at least 7 days before any auction or sale, under the Consumer Legislation Amendment Bill introduced to Parliament. The laws, which take effect on October 1, carry a significant enforcement mechanism. Agents who fail to publish a reserve price within the required timeframe will be prohibited from taking the property to auction. Once a sale is completed, the final sold price must also be made public, giving buyers clearer visibility over what homes in their area are genuinely worth. Minister for Consumer Affairs Paul Edbrook said the reforms were designed to eliminate underquoting. These new laws mean no more wasting your Saturday at auctions trying to buy a home that you could never afford, he said. The reforms will require agents to fundamentally change the way they price and market properties going to auction. Owen, the Real Estate Institute of Victoria has since then written to all MPs warning that unless the bill is changed, it will make life harder for buyers, sellers and agents. And one complaint from the REIB is that the bill may require sales campaigns to be amended or restarted when reserve prices change, thereby increasing costs for vendors and creating ambiguity for buyers. Does the REIB have a point?
Yes, they do. It's and I'm all for transparency and level playing fields when it comes to auction campaigns. But I think they've gone the other way, which just creates ambiguity for buyers, even more so. I mean, because it's really no different to publishing a price indication. All they're going to do is be publishing the reserve price. I mean, what's the difference? It's I mean, there is a difference. The reserve price is, once it goes past that, it's on the market. But it's if reserves need to change, which they do from time to time, then yes, you're going to create a lot more uncertainty in the market for buyers. I think the simpler option, which I've always I've always said should be the case, is that if there's an auction campaign, there should be no price guide at all. If you're putting a price on it, put a bloody price on it. If you're going to auction, then no price guides. That keeps it simple. It means that the buyer either needs to get educated or they need to employ someone that is educated. So if it's an auction, no price guide at all, either verbally or in writing, no price guides. That makes it simple, and that way no one's confused. So all they're doing is creating more jobs for bureaucrats to be able to manage all of these agents of whether they're doing the right thing or not.
I know Anthony Albanese and Jim Chalmers listen to the podcast. I don't know if Paul Ledbrook listens to the podcast. I hope he does, because that's a very interesting idea. Now, while I've got you opposing, Owen, another complaint from the REIV is that it's wrong to ask agents to determine or propose reserve prices, because reserves are actually decided by vendors, and therefore agents are being made liable for something they're not actually responsible for. Is the REIV right or wrong about that?
Well, yes, they are to the letter correct, but agents, of course, help vendors come up with the reserve price. So, and they're usually talking about it about a week beforehand. So it just means that conversation needs to be had earlier. But that being said, a reserve price in that last week could change. It depends on the interest in the market and what's been discussed from buyers to the agents and passed on to the vendors. And if there's a chance to be able to get more and set that reserve higher, then they want to be able to take advantage of that, which means, going back to the first question, if they need to change the reserve price, then where's the regulation about how do they go about changing the reserve price? It's and really stating the reserve price 1 week before auction. I mean, is that just saving all of those uneducated people from turning up to an auction for a house that they could never afford in the first place? Is that really what we're trying to do? Yes. How about people take responsibility for their own research when they're spending quite possibly millions of dollars by either getting educated or employing someone who has the education already?
According to the Consumer Affairs Minister, Paul Ledbrook, these reforms are designed to eliminate underquoting. This raises a deeper question, though, which is, should underquoting be illegal?
Well, as I stated earlier, I think we should just have no quoting at all. And then you either have to be educated or you have to employ someone who knows the market that you're looking to buy in, and pay them for that service to do that job.
What about a private treaty campaign, though? You could do underquoting there. Should that be illegal?
I mean, and I mean, what's the difference on a private treaty?
Should we eliminate kind of price guides for private treaties? Is perhaps what I should have said.
No, well, if it's private treaty, you've got a price on it, so there's no price guide. You've got an asking price. So if you've got an asking price, then yeah, you're putting it out there. If the property is worthwhile taking to auction, then you take it to auction, and it's up to the market to determine on the day what the price is. And if you're not sure what the price should be and whether it's in your ballpark, then yes, do your research, go to 10, 15 different auctions in the local area, and over the coming months prior to, and get to know your market, or employ a buyer's agent that specializes in that market, and get to know the difference. But there's many sales agents who are quite happy to discuss with you properties that have sold. Now, they've also talked about making sure that sold prices are published within 7 days. So if that happens, then it's a lot easier to do research. So it's just like, just do your research. You'll know exactly what you're talking about. Or again, for the umpteenth time, employ someone who knows what they're doing. To pay a buyer's agent to do that work for you with their wealth of knowledge is cheap, is very cheap value when you're looking at spending millions of dollars on a property.
We're going to stay in Victoria for our next story. Victoria also caps lease breaking costs and strengthens renter rights. Victoria's Consumer Legislation Amendment Bill will also introduce a series of new protections for renters, including a cap on the cost of breaking a lease at a maximum of 4 weeks' rent. Currently, tenants who need to exit a lease early can face open-ended financial liability, depending on how much of the lease remains and how quickly the landlord finds a replacement tenant. The new cap places a firm ceiling on that exposure, regardless of circumstances. The legislation also grants tenants the right to additional keys or fobs for the property they are renting, addressing a practical issue that has been a source of ongoing dispute between landlords and tenants. Renters will also gain the ability to pay their bond directly online to the Residential Tenancies Bond Authority, removing the need to transact through a landlord or agent. Minister for Consumer Affairs Paul Edbrook said the changes were about basic fairness. No one should be trapped in a lease they can't afford to leave, so we're capping the cost of getting out. And if you're paying rent, you're entitled to your own set of keys. It's that simple, he said. So, Owen, what do you think of capping break fees at 4 weeks' rent?
Well, this is something that's been around in New South Wales for quite a number of years, and the system works fairly well. But that's okay when we're in a market where there's not much vacancy. It's fairly easy to get a property leased again in most areas, but it's not the case in all areas. So again, it's so while it has worked okay in New South Wales, it's only because of the low vacancy rate that it has. If you're in an area where it's hard to find a tenant, which there are areas like that, then what's the point in having a 12-month lease if a tenant is just going to break it and pay anywhere between 1 and 4 weeks break fee because they've had a change of life situation, which change of life happens, but it's the owner of the property doesn't have that luxury with the bank with paying their mortgage. Why can't we treat tenants like adults as well?
Good point. Okay. Under the new law, another reform is landlords will no longer be able to unreasonably refuse a request for an additional key or security device. What do you think about that change?
I know that's a fairly that's fairly common sense. If there's 2 adults living in the property, then they should have 2 keys and 2 fobs. No argument there.
Okay, and just wondering if we can look at the big picture. How would you assess the Victorian rental market? So, is there a level playing field for landlords and tenants, or is it unfairly skewed towards one of the parties?
Oh, it's definitely skewed towards the tenants, and even more so after these. Even though I don't see anything hugely wrong with these changes, but in general, yes, everything is skewed towards the tenant. I mean, we've got a case in Victoria where a tenant's over 6 months behind in their rent, and just because the owner lives interstate. They've got, it can't be heard the case can't be heard in tribunal, VCAT, so it has to go to the magistrates court. Now, of course, it takes a lot longer to get heard in the magistrates court, and of course, if they go over time in their docket for the day, then it gets adjourned. And this has happened twice already. So this is just dragging out the process even more so. So yeah, it's so going back to the original question about the break lease fee. Yeah, owners can't break a tenant's lease, and paying them out up to 4 weeks rent, just because they want to. It's yeah. So does that answer your question of who's got the balance of power here? Yeah, it's a bit ridiculous. Yes, I'm all for protecting the most vulnerable in our society, but there's a lot of tenants who choose to rent and because they want to, and a lot of them take advantage of the situation. So, yeah, it's not great.
Our final story is going to move from the rental market to the sales market. Market slowdown is bypassing first home buyers, research finds. New research has found that while property prices are broadly softening, the slowdown is concentrated at the premium end of the market and may actually be making conditions harder for first home buyers. The research by founded head of research Kent Lardner tracked floor and ceiling prices across every statistical area 3 in Australia. Statistical area 3 is a geographic region. It's roughly the size of a large suburb or small district. And it tracked those statistical area 3s over 16 consecutive 90-day windows. The floor price represents the level below which the cheapest 25% of homes sell, and the ceiling price captures the level below which 75% of homes sell. Lardner's research found that in 69% of markets, floor prices, representing the entry-level tier, have risen over the past 6 months by a median of 4.2%. Ceiling prices, representing the premium tier, rose by a median of only 2.6%. The softening the headlines are reporting is real, Lardner said, but it is falling almost entirely on people who already own property, not on people trying to buy their first. The $1.2 million house is getting cheaper. The $750,000 house is getting more expensive. Lardner said the market was not easing for first-home buyers, it was easing past them, and called for honest scrutiny of whether policies designed to help first-home buyers might, in practice, be doing the opposite. Really interesting research,
Hallelujah.
Owen. So the research shows prices are rising faster for entry-level homes than more expensive homes. Why would that be?
We've talked about it many times. Yes. I mean, we see the headlines on the news about house prices dropping 5%. But that's because the top end of the market might be dropping by, 10 or more percent. But then you've got the lower end of the market and the middle part of the market are still increasing because everyone that was going to buy a more expensive property is being a bit more conservative and buying something cheaper, or they're bowing out altogether. So it's it's again, it's supply and demand, Nick. If there's more people being squeezed by borrowing capacity and they want to get in the market still, then what do? They just go for something cheaper. And so there's more demand for cheaper properties. And guess what? Prices go up as a result.
The research also found that while prices rose in 69% of markets over the previous 6 months, they fell in 31% of markets. What are some reasons why prices might have fallen in those locations?
It again, it could be supply and demand. You know, in a lot of areas where especially where there's a lot of new developments, there can be properties where there's not as much demand. So there's a lot of supply that comes up, or it's simply, yes, the moving of the market, and yes, there's some markets where in the mid and lower price markets, there's not as much demand. So it's there could be an oversupply of units in some particular areas, and not as much demand for them. So it really comes down to a case by case basis in that sort of 1/3 of market.
Founders head of research, Kent Lardner, said the market is not easing for first home buyers and that policies designed to help first home buyers might actually be doing the opposite. Are you surprised?
Not at all. We've been saying, and yes, this 5% deposit scheme, it's just fueling that bottom end of the market even more. And the stamp duty concessions, it just fuels that market even more. So why are people surprised? Isn't it just basic common sense? Yes, but I don't think they teach that in schools these days, do they?
I don't think they do. Did they ever teach common sense in schools?
Probably not. If you've met most of the teachers in schools, at least in my day, don't know if they've changed, but yes, it's not surprised at all. It's bottom end of the market. It's just been pushed up. So everything is trying to be squashed into the middle. The top end of the market is getting cheaper. Bottom end of the market is getting more expensive. So you end up paying a premium for an average house as a result. So it's there needs to be a lot more lower end housing available to buy, and it's to make it easier for people to get into the market, and also a lot more of the in the medium part of the market to try and we need to be able to thin out the supply so that the demand can be easily met.
Well, thank you very much, Owen. Great chat as always, and look forward to seeing you again next week.
Thank you, Nick, and looking forward to it. See you then.